I'm Spencer Mazyck, and joining me now to discuss the outlook ahead for the IPO market is Marc Jaffe. He is the global co-chair of the capital markets practice at Latham Watkins. Last year, Latham advised on more U.S. IPOs than any other law firm. Welcome, Marc. Thank you for joining us today.
Well, Spencer, thanks so much for having me on your program. Look forward to it.
So, Marc, isn't 26 the exact number of U.S. IPOs that Latham handled last year?
26 is the exact number, and I think my math is never quite perfect, but I think that was almost 20% of all IPOs done in the United States last year. So we were very busy. It was a great year.
With a combined value of $5.7 billion. That's pretty impressive, Marc.
Yeah, you know, Latham is a global law firm, and we have offices across the United States and abroad, and that really contributed to our ability to be a market leader in IPOs last year. One thing we saw begin to happen again in the U.S. capital markets was the access by European companies of those markets, and the fact that we are well positioned in Europe, coupled with a industry-leading U.S. IPO practice, turned into a great boon for us in 2012.
Well, so let's talk a little bit more about 2012 and some of the IPOs that you worked on. One of the most notable IPOs was Manchester United. Can you tell us, why did the English soccer club decide to list here in the U.S.?
That is a great question, and one that garnered a lot of attention, Spencer. Ultimately, it came down to the fact that the capital was available in the United States. The press had been accurate that Manchester United considered an IPO in other jurisdictions, notably Hong Kong and Singapore. At the time they were ready to go public, the U.S. capital markets were way more active than the markets in Singapore and Hong Kong, and it was the perfect time to bring Manchester United public. The United States was the perfect market at that time.
But at first, whenever the stock wasn't performing so well, did you begin to second guess the decision to list here instead of in Asia?
Well, I think that the thing that was second guessed wasn't so much the decision to list in the United States. And you're right, the IPO range was downsized prior to pricing. The stock traded flat to the bottom of the range. The stock has performed incredibly well, and it's only been 9 months since the IPO. But initially, people considered whether or not we had told the story correctly. And what was most interesting for me about the Manchester United IPO was the storytelling. The legal compliance was complicated. The fact that it was one of the first IPOs done under the Jobs Act.
Yeah, exactly. I was going to ask you about that.
Made it tricky. The fact that it was a foreign private issuer made it tricky. But to me, the most interesting part was telling the story. I think people expected it to be a story about a football club, probably the most successful football club in the world. But it turned out to be a story about a global brand, and a global brand that had the sort of attractiveness in Asia, in Europe, and even in the United States that is almost unparalleled by any sports team, period, paragraph. I'm a huge New York Yankees fan, but if you're traveling in Seoul and you're walking through the airport, you are way more likely to see a Manchester United jersey than a New York Yankees baseball hat.
Absolutely.
It is a global brand.
And you mentioned that the stock has performed incredibly well, but in January, Manchester United became the first sports team in the world to have a $3 billion valuation. So what do you think was the turnaround here? Why did the stock significantly rise over the last several months?
I think it started to rise, and if I wish I really knew, but I think my guess is it started to rise because the story that we told about this global brand, the attractiveness of the Manchester United name and logo across Asia began to see real results. Contracts were signed with Chinese beverage manufacturers. Contracts were signed with for credit card logos with credit card companies in Asia. The story we told about just being at the tip of the iceberg of being able to sell the brand began to play out, and
the club performed very well this season.
And the club,
that's another reason.
And the club performed well. I think it was fair to say, and we made clear in the disclosure document, that the result of any given match really didn't matter to the value of the club, and that is true. What is also true is that you need to continue to put a winning product on the field for the brand to have the level of attractiveness that it does. But Manchester United is the winningest franchise in the history of the Premier League. It's the winningest franchise over a period of time in Europe. It is just a terrific football product, which is enhancing the global brand. It was a great transaction to work on.
So let's move on and talk about Linn's IPO, which I think was the second or third largest U.S. IPO of 2012. So how did Latham come to represent the MLP?
Sure. Linnco is a great story about Latham's global footprint. Linnco is an energy company. About 3 years ago, Latham opened an office in Houston, Texas. Tough market for a law firm to enter. There are great law firms there that have been there since the beginning of the boom of Houston and the oil and gas industry in the U.S. Latham was not one of them, but we were able to move into Houston 3 years ago, assemble an all-star team, truly an all-star team, from each of the key firms in that market. And in a very short period of time, we've become the leading MLP firm, Master Limited Partnerships.
Oh, wow. That's impressive.
In the United States. MLPs were a great IPO product last year. I believe there were 14 MLP IPOs done, which represented about 20% of all IPOs done in the U.S. last year. In fact, 8 of the 14 were done in December. So my poor colleagues in the Houston office probably didn't get to go home for Christmas, but it was a busy, busy month.
It was certainly worth it, I think.
And I thank them. Linnco was interesting because it was the first time that a MLP product, a yield-heavy product, was brought to the market as a C Corp. The reason that's important is that an MLP is a partnership, and there are a lot of investors, particularly on the institutional side, that don't want to or cannot buy by charter into investments that produce K1s as opposed to 1099s. Our lawyers, together with the lawyers for the company and the investment bankers, structured a product which allowed people looking for the MLP yield-heavy investment to invest through a C Corp and realize the benefits brought to market by an MLP.
Well, yeah, it did very well after it debuted. And is that why people have called it the perfect income stock or the ideal stock for the lazy dividend investor?
Yeah, I think so. Again, it has all of the terrific tax attributes of an MLP. Coupled with the ability to invest in a C Corp. In short, at a 20,000-foot level, the C Corp held the MLP interests of the partnership. The tax benefits realized by the MLP are shared with the C Corp, and the investors in that C Corp get that benefit, the yield, at a low tax profile.
Last year was a pretty decent year for the U.S. IPO market. Proceeds from IPOs rose 17% as compared to 2011, but the same cannot be said for worldwide IPO issuance, which fell about 30%. So what's the reason for the global decline here?
Well, while the U.S. market was healthy, and we continue to see the U.S. market remaining healthy, Europe remained at a little bit of a stagnation point because of the currency crises and the banking crises in Europe. The liquidity just wasn't there at the levels that we're hopeful it will return to. China, which had been a huge contributor to the global IPO market, saw a down year last year. And if you think about how much Chinese activity can move the needle on a global basis, it's market. And it was a slow year last year.
Yeah, slowing growth there.
Slowing growth, but we're beginning to see the Chinese market begin to push forward again.
So globally then, what does that mean for 2013? Will the IPO activity pick up?
It already has. The first quarter, which we're soon to approach the end of, has been incredibly active. It's been active both in the U.S. and we've seen increased activity, not so much in Europe yet, though a little bit, but increased activity in Singapore, Hong Kong, and the Shanghai Exchange. And I think that global activity for 2013 will be an uptick from 2012. I think the U.S. market, which had a great year in 2012, will see another great year in 2013.
Yeah, it started off pretty strong with Bright Horizons, Norwegian Cruise Line, and a few other companies coming to market.
Yeah, and the tricky thing is that with the Jobs Act and the ability for emerging growth companies to file on a confidential basis, it's a little bit harder for people in the predicting business to know exactly what's coming, which frustrates journalists to no end. I don't know if you have a secret.
I don't share that frustration, but I understand it.
But we know, because we know roughly our percentage market share, coupled with our connections with investment banks, we know that there are a lot of folks in the pipeline that have not filed publicly yet. And as long as the market continues to show the strength that it's shown thus far in the year, we think it's going to be a terrific year There are very few companies that don't file as emerging growth companies now.
Yeah, I mean, let's talk about the Jobs Act because you mentioned it, and April marks the first-year anniversary. So you used it with Manchester United. Do you think that how effective has it been? How effective do you think it will be in getting companies to go forward, go public?
I happen to think it's been incredibly effective, and Manchester United is a great example of why it was effective. Manchester United is a company that's in the public eye. Every little thing they do is written about. And the ability to file with the SEC, vet a vast majority of comments with the SEC, put together a disclosure document that would pass SEC muster, largely without the outside influence of the press, was a terrific benefit. Other companies file under the Jobs Act and realize the benefit of being able to be prepared to go public without having to pull the trigger. And lots of companies parallel track a sale process versus an IPO. Lots of companies really wait for the ideal market window. And being able to file with the SEC, be virtually completely vetted with the SEC before opening the kimono and letting the entire world know that you're looking to go public is a great benefit. No one ever wants to withdraw a registration statement. You can withdraw for lots of legitimate reasons. It just never looks good. And when you come back, you always have to answer the question as to why you withdrew the first time. Jobs Act allows you to avoid that.
So it sounds like it will be a benefit to the IPO market this year in the U.S. for 2013. What about the low interest rate environment? Is that particularly good for REITs and MLPs?
The low interest rate environment was huge for MLPs and REITs in 2012. I think we heard from the Fed yesterday that the low interest rate environment is going to continue.
Which is great.
Investors are looking for yield, and I know that MLPs had one of its busiest years in the last decade, and I believe that was true for REITs as well. In fact, Latham is a huge REIT practice, and I know my partners who work in that area have been unbelievably busy right from the get-go in 2013. So I expect that those yield-oriented products are also going to help drive the IPO market.
And speaking of REITs, I read a couple of weeks ago that the Empire State Building is a little bit closer to an IPO. Do you think that's going to happen this year?
Can't speculate on that. It'd be cool. It would definitely be cool.
Well, can you at least speculate on who might be in the IPO class of 2013? What are your guesses?
Sure. I can give you broad industry guesses.
Good.
I will tell you that I'm representing the underwriters on the SeaWorld IPO, which is a lot of fun, and that's been filed publicly because it's one of the few companies I've worked with recently that is not an emerging growth company. So SeaWorld is on tap for this year. I am seeing a lot of activity in consumer retail, in the restaurant space, and in addition to energy, life sciences, I think we're going to see activity across all of those industry segments.
Well, and also just a very specific company that we all know and use is Twitter. There's been some talk about it, but do you think 2013, maybe 2014 is the year for it to go public?
I don't have any knowledge about Twitter's plans, but I would think that 2013, 2014 would be perfect for them to go public. The market's hot. Their product is hot. Facebook tripped a little bit at the beginning, but has done very well subsequently. There's a lot of demand for companies like Twitter. So depending on what the owners want to do, this would be a great time.
Well, I have to say thank you very much for joining us today and sharing your insights. We really appreciate it.
Spencer, this was a lot of fun. Thanks for having me on your show.
For more information on this or other topics, subscribe to BloombergLaw.com. You can follow us on Facebook and Twitter. Thank you for joining us. Bye, everybody. Thanks very much. Thanks.